unless you have several $1,000,000 sitting around in the bank, you're going to have to raise capital to really expand and grow your real estate portfolio. And you can really plot along and acquire properties with your own capital if you have a limited amount of capital. But to really grow to a massive scale, raising capital is going to be a really good skill set to build so you can grow your portfolio to a large scale. And like I was saying, you can plot along if you have your own capital at a smaller rate. Like you could buy doubles or fourplexes, or if you have $1,000,000, you could buy probably 50 to 100 units in one shot. But it's going to be a slower growth process if you self-finance all the way through, unless you have a lot of capital. So it's a good way to get started by acquiring your own deals and getting things going and learning and getting experience. It's almost a track record that you're going to start building up for yourself so that you can, in the future, present some of your projects to people or friends that you may know, or different institutions, private equity investors, any of these types of people that you come across in the future that you network with. Once you build up that initial track record of a portfolio of apartments, it's going to sell a lot better, and you're going to be able to help people and show them a lot better of how you've been able to generate a really good return on your investment. And that's going to be a huge selling point to investors, because investors are always looking to generate a good return on their investment that is reliable, and real estate offers just such a great vehicle to generate a return on investment that's reliable, it's predictable. You can scale it, it's secure. You can drive up and see the property, unlike different other investments that are alternative, like the stock market. So real estate carries a tremendous amount of power and weight to it, unlike any other investment that you can put your money into. So real estate is something that you want to really grow with and build a large portfolio with. And the bigger that you get, you're going to be able to have a team that's going to help you manage your property. So it's really important to put a scale together of how much you want to acquire your properties and how many units you want to get. So it's a big process that you just have to put all the pieces together with. And when you're first getting started, you're going to have to start self-financing and pulling deals together on your own. There is an abundance of money in the marketplace right now, and there's a theory called the velocity of money. And this is basically, when you spend, every day, everybody transfers $1 of wealth. So you may have $1 and you buy something for $1, and that's going to be transferred on to the next person. And so that dollar is always going to be spent, and it's basically called the velocity of money. And right now the velocity of money is low, so people are sitting on a lot of cash. Compared to pre-pandemic, the velocity of money was a little bit faster, so things were more liquid and people were spending more money and people had less money. But now, through the pandemic, people have a lot more money that they're sitting on, because it's really tough to find good investments that make sense where you can generate a really good return on your investment. If you just take a look around, just take a walk in your neighborhood or take a drive around your neighborhood and just around town, money is everywhere, and there's an abundant amount of capital within the marketplace. Just look at all the cars that you're driving by and all the real estate, all the single family houses, all the restaurants, grocery stores. Everybody's there spending money. So money is everywhere. Just look at all the infrastructure, all the roads, and everything that you look at, and the planes flying in the air. There's a ton of money in the marketplace, and money is everywhere, and there's an abundance of it. So you should never feel like there is a shortage of money, because that's just a mindset that you have to shift so that you know that there's an abundance of money out there. And you just have to figure out how you can aggregate money within the marketplace to bring it in and invest it into the market for other properties and purchasing assets. You can raise capital. You just have to find where you can pull in money and raise capital, or pool your money with the capital that you're raising to invest into real estate. So it's out there. You just have to figure out a channel that you can put into place that you can pull capital from to invest into deals, so that you can generate a good return on your investment and grow a large real estate portfolio, because real estate's really the best investment that you want to be in, because it is so reliable and it just has that predictability to it. Just look at the housing market right now and the rental market. Everything is extremely hot. Houses are flying off the shelves, and bids are going in above asking by hundreds of thousands of dollars more than what the listing price is. So it's a crazy market right now. It's funny. It's like the listing price, we were talking the other day, and it's almost like the listing price is known as the starting price now, because houses are being bid up so much that it's unbelievable. The market is extremely hot. And the same thing goes for the real estate market, because for rentals and rental real estate, rents are appreciating so much as well. And things that we're constructing and renovating are all pre-leased before we even complete the project, because the speed at which people are leasing units and the number of tenants out there for rental real estate and multifamily is just growing so much. The demand is increasing and the market is becoming extremely hot. So the market is perfect for owning and managing real estate. Your tenants are the leverage to creating success with real estate, because they're the ultimate factor for the value of your property. So the happier your tenants are, the more successful you're going to be with your property. And you have to provide a massive amount of value to your residents by increasing the value of your property, keeping everything up to date, keeping a nice living experience, good curb appeal, keeping the building's exterior nice and landscaping. But also on the interiors too. You have to have nice interior finishes and kitchens and countertops, flooring, paint. Everything has to be nice and clean and modern. And if your units are in really good shape, then they're going to rent really, really quickly. You're going to have a lot of happy tenants, and your property is going to appreciate very well. But it all comes back to having a good tenant base. Without the tenant base, then your property is essentially worthless. So you have to make sure you take care of your residents and do the best you can for them, so that they continue paying and they see a good value in what they're paying for. And that's going to be the ultimate factor for the value of your portfolio. I mean, just think about it. If you have a property in a good location, you provide a good value, you're going to attract really good, high quality residents that are going to pay their rent on time. But if you buy a property that is more run down and maybe the location isn't as good, then you may not attract the best type of tenants at your property, which could lead to delinquencies in your rents. And that all trickles down to the value of your property. If you're having delinquencies and people not paying and your property's not kept up, then your investment isn't going to appreciate and grow. It's going to kind of trend, or it's going to probably trend downward, which is going to not help the value of your money. It's going to make it take longer for your investment to be recaptured. So make sure that your tenants are always taken care of and you're getting a good tenant in your property so that you can appreciate your property and make money with it. I think one of the important pieces for really creating success with real estate is staying around positive people. And there's always going to be somebody that always has a comment or feedback that may not contribute to your goals. And that's fine. Not everybody's going to agree with what you're doing. And some people may think that the process that you're using may not be profitable, or they may not understand what you're trying to accomplish. But as long as you stick to what you know and you just keep pushing and working hard and making sure the process goes smoothly and you're always growing it and perfecting it and improving upon it, then that's going to be the ultimate factor to success. You know what's going to work. You just have to continue persisting with it and make it work. The hardest part about investing into multifamily real estate is finding really good deals. So that's what you have to persist on the most. I mean, finding capital is another difficult task, but the ultimate factor for becoming successful investing is finding those good deals. And it's hard to come by good deals that you can invest your capital into to generate a return on. So The best thing that you can do to have the most success in real estate is building a good network where you can connect with property owners that are in markets that you want to acquire properties, just picking up the phone, contacting people, building relationships, working with brokers, just building your network and building a track record too. Brokers and sellers are going to want to know what you've closed on in the past and what successes you've experienced. And once you have some of that track record, it's going to allow you to instill confidence in others to give you deals that you can close on and give you the opportunity. So that whole process is one of the trickiest parts of investing into real estate. But once you get that system down and you build your network and you grow, it becomes easier and easier in time. But it's never a simple process. It's always hard. You're always hustling to find deals. So that's one of the most critical components to really mastering investing into real estate. I want you to set 5 positive affirmation goals that are going to help you build more success. And when you have goals and targets that you're shooting for, that's going to kind of keep your mind focused, and you'll be aligned perfectly straight in the path that you want to go with your investment strategy. So you want to put things together such as some of these phrases like, I am the owner of over 10,000 apartment units, and I have a team that manages my rental properties. And phrases like these are going to really help you sort of manifest the success that you want to accomplish. And you want to make sure that you're saying these phrases in the tense that you already have them, and that's going to help manifest the success that you want to achieve. And you can also add other things such as, I am in really good shape and I exercise daily. And anything that you want to accomplish, whether it's in business, life, or with your health, then you should create these affirmations. Build a list of about 5 or 6 of them and then write them down in your journal every single day, and that's going to help you manifest success within your lifestyle. So the bottom line is you basically have to find an abundance of real estate deals that you can acquire and put your capital into so that you can grow your capital so you can invest into other real estate deals, and also building a network with other investors and people that have money that want to make more money so that you can use their capital to put it into your deals and generate them a return as well as a return for yourself. These are the 2 biggest components to being successful, and once you can master them, it's going to allow you to grow much more rapidly, successfully, and it's going to create a lot of financial freedom for yourself. So those are the 2 items that you really want to start pushing to accomplish as soon as possible.